If you had 1 crore to invest today, where would you put it?
Equities,
Tea, coffee or stock market updates in the morning?
stock market update.
A market prediction you got completely wrong.
Lots of them.
Okay, what is the philosophy behind SEBI introducing this category?
India has a very robust and thriving derivatives market, which is now one of the largest in the world.
Number of people who are participating in the AIF market is very small.
80-90% of people don't fully understand derivatives or long-short strategies.
Very restricted market, even though volume-wise big, it's 10 lakh plus crore total AIF market.
Even if I'm an HNI who has 1 crore, why will I not put it into an SIF? Why will I continue doing AIF? Do you think SIFs could be a 10 lakh crore plus category? Hello everybody, welcome to a special episode of InCred Money Talk. My name is Vijay Kuppa and I am the CEO of InCred Money. Today's episode is very special because two guests who are with us today, Rishi Kohli and Nitin Agrawal, who are going to help us navigate the world of SIFs. SIF stands for Specialized Investment Funds. It's a new category of asset class that's been introduced by SEBI to help retail investors and other investors invest beyond traditional mutual funds. To give us some background about our guests, Nitin Agrawal has over 15 years of experience in the financial markets. He was the co-founder of Oro Wealth and he is a portfolio manager. He has worked in the wealth tech industry and is one of the main people who can help us explain this topic today. I also have with us Rishi Kohli. There is no one better than him who can explain this topic to us today, and he is a master of this domain. So welcome Rishi and Nitin to today's InCred Money Talk.
Thank you so much.
Thanks.
So Nitin, can you tell me a little bit about what exactly is SIF and how is it different from traditional mutual funds?
So first of all, thank you for having me here. SIF, as you have correctly said, it's different from traditional mutual funds. It sits somewhere between a mutual fund and a PMS. The basic philosophy in finance is that if you diversify into different asset classes, you can get better portfolios and better returns. So with that philosophy, SEBI said that, okay, there's some gap in between what today's mutual funds can offer, which are typically long only, you can only invest as like long into markets, and a PMS or an AIF where PMS is more concentrated, but the ticket size is much higher. AIF again is a 1 crore ticket size. So there was a gap in between the two categories, and that's where SIF has come in. So SIF minimum investment amount will be 10 lakh rupees compared to 50 lakh in PMS or 1 crore in AIF. The second thing is it will allow a lot of things which are not possible in a current mutual fund, traditional mutual fund, like long short, like considered exposure, option exposure, etc. So it will give you a different risk asset class for investors to diversify into, and that's where the SIF has come in.
Okay. Rishi, given that this sounds like advanced investment strategies, I'm sure there is a higher amount of risk and a larger minimum investment towards this. Can you tell me, in the overall investment landscape, where does this exactly fit if you look at mutual fund, PMS and AIF?
Yeah, so SIFs are closer to AIF because only in AIFs, SEBI allows long-short strategies. In PMS, it is only long-only strategies. I'll also explain what long-short means. So long-only is traditional equity portfolios, your long stocks, etc. Long-short means that you can also go short certain stocks via the derivatives market, obviously. India has a very robust and thriving derivatives market, which is now one of the largest in the world. And there you have index futures, index options, single stock futures, stock options. So using these, you can go short the markets, meaning that if markets fall, you can make money. So when you combine long portfolios with these kind of either short options or short futures strategies, then that in a loose way, in a broad term, can be called long short. So that is allowed only in AIFs as of today, but AIFs have a 1 crore minimum. In SIFs, we will have a 10 lakh minimum, and therefore it will be much more flexible and even smaller HNIs can participate. So that is the advantage. Now, obviously in an AIF, there is a 200% gross exposure rule. SIFs will still be within the mutual fund regulations and therefore 100% exposure rule, but there are more nitty-gritties as to there some naked shorting will be allowed. So that makes it much more flexible than a mutual fund or a PMS today. And therefore more sophisticated strategies, more types of strategies can actually be done there.
Got it. And when you say 200%, what does that mean? 100% exposure,
Yes.
200%?
So what that means is that let's say you as a client have invested 100 rupees in the fund. Now again, when I do a mutual fund or a PMS, I'm only buying stocks. So I can buy only up to 100 rupees of stocks. But the moment I go long and short, and I can do that via the derivatives market, so then I can actually be 100 rupees long on some stock futures. I can be another 100 rupees short on some other stock futures. And I'm actually paying only the margin, right, of the futures, which is between 15 to 30% depending on the name. So let's say 30% on the higher side. So 30% plus 30%. So you're still actually spending only 60 out of the 100, and therefore you're fine. But your overall gross exposures have become 100 plus 100, 200.
Okay. So that's going to be allowed in the SIF.
So SIF will still be 100 because it is a mutual fund finally format. But yes, you could be 75 long and 25 short.
I see. Okay. So why would someone want to do this or participate in these kind of structures? What is the aim behind introducing this?
Yes. So this will again be, 10 lakhs is also HNIs, right? It is not completely retail. So it won't be like every retail can participate. But for HNIs and higher categories, there is a group of investors who would want sophisticated strategies and for diversification, firstly, because only when you have equity and debt, there's a limitation to how you can structure your portfolio. The moment you have many other variations that you can do, long, short, hybrid, etc., then you can have much more efficient portfolios that you can create. So of course, it means more sophisticated investors on the HNI side, more institutional investors, corporate treasuries, etc. So all of these could be interested, and that helps them also target either higher return strategies with higher risk, or low risk strategies but with some diversification to the existing debt kind of strategies they may have.
Got it. So Nitin, taking that point forward, do you think that retail investors could also participate in this asset class, and how do you think it would be beneficial for them?
See, I think it will be a big success in retail market also, because a lot of these strategies are not available in retail market today. SIF allows them to take participation in these strategies because minimum is 10 lakh rupees. Now this 10 lakh is also per PAN limit. So if they want to participate in say 5 different SIF strategies in a single mutual fund, they will only have to do 2 lakh each.
Okay. So this is in one mutual fund?
One mutual fund per PAN, yeah.
Okay.
So if suppose I can get exposure to some of these strategies, to give you some simple example, right? Like what you were saying, high risk strategy. Suppose I have 100 rupees today, I want to invest in Nifty. Nifty goes up by 5%, I make 5 rupees, 105 only, right? 100, 101. So this is the long only typical mutual fund category. Now with these strategies, what I can also do, I can make actually 10, double the amount which Nifty goes up, because I am taking leverage. I will buy futures of 2 times the exposure. It's not allowed, it's 200% is not allowed, but I'm saying that that's the point, that you can take higher risk, but obviously it will come with higher return. So a lot of these structuring can be done that my payoff could be different from what Nifty is doing, pure Nifty. So for example, in SIF, what I can do is I can have say 70% in debt and 30% I buy Nifty option.
Okay.
And that Nifty option could be basically more than what Nifty gives. So suppose Nifty goes up by 10%, I could make 15. These kind of studies are not possible for retail today, and that's why the SIF has come in and they will be able to participate in this. And because overall it makes sense to diversify into different strategies, I think it will be a big market which will open up among retail also. Obviously education will be a big problem, and I think that's where InCred Money comes in.
Right. So is this only in equity markets? Do you also have SIFs across different asset classes like debt and others?
So what SEBI has said that SIF will have a lot of strategies, and they will define what strategies could be done over time. So as of today, they have defined about 3 different categories across equity, debt and hybrid. So in equity, they have defined what is possible, in debt what is possible, and in hybrid what is possible. Across all these, they have right now come with all long short only. So some long and some short, which is allowed, but it will be across equity, debt and hybrid.
And hybrid is equity debt only. As yet, has it gone to commodity or any other asset
No, it
class?
has actually, it has. So what they have said in hybrid is you can also do REITs, you can do commodity. Not only commodity, you can do commodity derivatives also. So commodity futures, commodity options.
Okay.
So basically, a variety of options will be available.
What was the, if I have to ask you, what is the philosophy behind SEBI introducing this category when you already had AIF? Why bring in SIFs?
So I think in the AIF market, right, it's a very restricted market. Even though volume-wise big, it's 10 lakh plus crore total AIF market, but number of people who are participating in that AIF market is very small. What SEBI wanted is to basically democratize this and that's where the SIF has come in with minimum low ticket sizes. But very importantly, within the framework of mutual funds, right, which is very, very regulated. So it's kind of safe, transparent, reporting wise is very, very strictly done. So in a safe environment, retail investors could get access to these strategies, and that's why SEBI has introduced it.
So Rishi, if you, as you said, it's very close to AIFs, right? So if I'm an investor and I could possibly choose between an SIF and an AIF, how do I choose, and where do you think the flows of tomorrow are going to be in?
Yeah, so see, first is the ticket size. So someone who wants to invest 10 lakhs or 20 lakhs, today he doesn't have the option of doing long short at all, right? So with SIFs, firstly, that is possible. So a lot of, absolute return strategies are there in AIF where you are saying that, okay, I will give you fixed income plus kind of returns while doing very low risk equity, derivative and long short strategies. So again, as I said, 200 versus 100% exposure, there'll be some limitation to begin with, but you can still do a lot of things that you can't do today, and therefore those investors will also get some participation in that. Secondly, the taxation, that is important, right? Because in an AIF, there is no tax pass-through, and let's say if you're doing all derivative strategies in that, then you get taxed at the highest level of 39%. Whereas now, because it will be in a mutual fund format, still full clarity has to come, but largely it would be the current mutual fund rules. So it will depend on the investor's holding period, right? Whether it's and then it will be capital gains, short-term capital gains or long-term capital gains, which will make it much more tax efficient for the investors. And therefore, even if there are slightly less exposure strategies I run, and I make slightly lesser return than an AIF, maybe post-tax I'm similar or better. That is very highly likely. So that makes it very appealing. And then, of course, even in AIFs, derivative commodities, etc., a lot of times there are some restrictions on that as well. Here, you can do add those kind of things also.
So Rishi, can you tell me a little bit about how an investor can choose between an SIF and an AIF, and what is the kind of SIF that could work in today's markets?
Sure. So SIFs, as we were discussing, has a minimum ticket size of 10 lakhs. And AIFs is still 1 crore. So obviously the HNIs who want to put in 10, 20, 30 lakhs, they can't put money in an AIF right now for all these sophisticated strategies. They will be able to invest in the SIFs. So that is one good thing. The other is the taxation. That is also beneficial because it is more mutual fund taxation. Whereas in an AIF, you get taxed fully at the fund level at a 39% if it's full derivatives. So that's a big difference. And then today's market and broadly the type of strategies, if we were to look at, so for example, the last 5-6 months markets have been coming down, right? And there's been a little bit of panic in the last 1 or 2 months on certain portfolios and certain market caps. When you are long in a mutual fund or a PMS, then you don't have any other option, but you will stay invested. What fund managers do is they take cash calls, right? But that also how much? I mean, you won't go to a 30 or 40% cash call. You'll go to a 5, 10, 15% at best. So in SIFs, what is going to happen is, let's say you are doing equity long short, where you are long, say 80% on the stocks, right? And then you're short 20% on other stock futures or the index futures. So which means that 80% long could be your, let's say it's a large cap portfolio, you're long Reliance, Infosys, stocks like that. That makes up your 80%. And 20% you're short some stock futures, where based on some whatever method or technique or model you have, you think that it will be stagnant or go down in relation to the first basket. So the interesting thing is that you don't, need it to necessarily fall, but even if it does better than the other side, you will get some alpha. And in this kind of market, obviously that 20% short, would have captured the decline in some of those stocks. And if some of that is actually outperforming the longs, then you make even better alpha, and at least you fall less, right? So that is one example. The second is, you can always have 70-80% money in debt and then be long some options, which could be longer term, one year, 2 year, even shorter term, and then get that mix where you're actually making higher returns or participating fully with the Nifty on the upside, fully or even more participation. But on the downside, you don't really lose much because it's a long option, which you can only lose as much as the premium you've paid.
Got it.
So these are some examples which I think in current market could have worked very well.
An example I can give is on the sector side. So today, as like with Trump coming in, there's a lot of uncertainty about global companies who are servicing, say, US market, right? Like IT companies. So in a typical mutual fund, I have no way to say short IT sector today. But in an SI, what I can do is say long consumer companies, which are domestic focused, short IT companies, which are export focused. So these kind of very specific views I can take in AIF. But it's not allowed in mutual funds because mutual fund you can only go long, you cannot short.
Got it. At max, you can go into cash.
Cash, yes.
That's right. Okay. So, Nitin, can you also tell me a little bit about the risks that are involved in this strategy? Because now we are talking about derivatives, you're doing long and short. Yeah. So, what are the risks that you could explain to our community?
Right. And I think that's the most important point, because all these strategies, whenever we talk about higher returns, obviously they carry more risk. So, whenever basically, even though we say that exposure is 100%, these strategies will allow you to take participation in equity market more than 100 via these derivatives. Now, as soon as you do that, basically you also increasing your risk. You could lose your capital up to that extent in terms of either premium of option, or if it's futures, then you can also lose a bit of notional, right? So you have to be very careful on what strategy you're choosing. What SEBI has done is they have defined a framework so that the risk is limited. So for example, in equity strategies, they have said, okay, you can have 80% equities long, but only 25% is short exposure. So what does it mean is, if I'm say investing 100 rupees, only with 25 rupees I can do this short view.
Okay, so they've defined a cap.
A cap.
Okay.
So that cap is 25 rupees. So worst case, even if some SIF manager goes fully into risk, on the short leg I can lose 25 rupees. So that SEBI has done this framework so that retail investors can basically participate in these strategies without thinking too much about taking a lot of risk. But obviously, this 25 is at risk, right?
Got it.
And similarly, on the long side, it's similar to any long portfolio. Obviously, when market goes down, it can go down. But what happens actually when you have this opportunity to come and combine long and short, there is a lot of opportunity to kind of reduce risk, because these are uncorrelated, right? Typically, when long portfolio go up, you can make some money in short side. When short goes down, you can make money on the long side. So in fact, if SIFs are structured properly, and that's what I feel a lot of AMCs will come out with, the risk could be lower. So for example, a strategy which is probably known as call overwriting. So what they do is, you are holding say a Nifty portfolio. Nifty goes up, you make money. Nifty goes down, you lose money. What you can do is you can sell some options or call options on Nifty. So what happens is, when Nifty goes down, you make money on those sold call option. When Nifty goes up, you make certain money and then it's capped. So you don't really lose money. You've kind of clipped your wings. You don't make too much money, but you also lose less money. So it's actually less risky overall. So these kind of strategy will be possible.
So both lower risk than normal portfolio and higher risk than normal portfolio are possible.
Yeah. What the SIFs come out depends on which AMC is going to kind of take what route.
Because there are derivatives involved, so SEBI has said that you need to mention higher risk, etc., whatever. But finally, similar to mutual funds, that riskometer kind of thing will be there, and you can categorize it as per various levels of risk.
Got it. And what would the taxation of this product be?
So taxation, interestingly, as of now, everyone is assuming that it will be same as mutual fund.
Okay.
Which means if it's equity SIF, then equity taxation, LTCG of equity, same with debt and hybrid. So it will be 3 categories like mutual fund. But still, the final clarity has to come, and that clarification will be very important, whether this will follow mutual fund taxation or not. But most likely it will, and it will be a big advantage versus AIFs, especially.
Got it. So if I give you an example of a typical investor who does say 80% equity, 20% debt, right? Now with this third SIF asset class coming in, how should they restructure their portfolio? If you could, give me an example.
Yeah, so I think,
and assume that I am a high risk investor.
Right. So the way right now the SIFs are, basically you should think of them as a separate risk bucket, right? Today you're only thinking of in terms of asset allocation, how much to equity, how much to debt, and maybe how much to say a commodity or something, right? Like gold.
Gold.
So equity, debt and gold. Now I feel investors and wealth managers should kind of position it as this is a separate risk bucket, and people should give some allocation to these long short strategies in their bucket, because this could be uncorrelated to your other exposures. And that's how the SIFs will be designed, to be uncorrelated to other strategies. So whatever, depending on the risk profile, whether 10% or 20% of their entire portfolio could be dedicated to these strategies.
And is there any restriction, like SEBI has categorization in mutual funds, right? One scheme per category. Is there anything like that coming up here too?
Yes.
So they have defined categories, and there will be one per category.
One scheme per category. Okay, got it. So if I have to think about this from a distributor and advisor point of view, and I want to suggest this to my investors, my customers. So what is the framework that I should have as a distributor? to whom is this right? Whom can I suggest this to? So maybe Rishi, you can take a stab at it.
The minimum ticket size sort of defines who all are eligible for it, and within that, of course, the kind of investors who are a little more sophisticated, understand a little bit either about derivatives or about asset allocation, or are interested in new types of strategies. Last few years, what has been happening is that a lot of active managers have not really been beating the markets very easily. So there's more and more hue and cry and demand from HNIs that, why not have different types of strategies which can do well when, other things are not working. So there is a good group of HNIs from that 10 lakh to 1 crore range who have been demanding a lot of new things. So I think those become immediate fits for the distributors and advisors. And post that, obviously, it is more about educating, right? So I think that even for wealth advisors and distributors, a lot of educating the RMs, etc., will be required, because 80-90% of people don't fully understand derivatives or long short strategies. So firstly, that has to be done. And then when they go to the clients and explain that, these are giving you different diversifications, then, it'll come into the client portfolios.
Got it.
In fact, SEBI has defined that to distribute this SIF, you have to first clear a derivatives exam.
Okay.
NISM 13.
So I normally do NISM 5.
As Rishi was
right?
saying, there's also
So
a lot
I
of
have to clear a new
misunderstanding
exam.
about derivatives,
Okay.
which is NISM 13. Then only you can distribute these strategies.
Okay.
And there's a lot of scope of mis-selling in these, because as Rishi was saying, there's also a lot of misunderstanding about derivatives in the market. So it's very important that first distributors and wealth managers get up to speed on the strategies possible, the derivative markets, etc. And then kind of take it to the client.
Right, because I think it's the first time derivatives are getting introduced to the normal investor, other than, via the AIF route. Right, got it. And can you also tell me from a mutual fund point of view, who can launch this kind of an SIF? Are there any restrictions to who can offer these kind of schemes?
SEBI has defined certain criteria. So first criteria is this is only available to mutual fund companies, someone who has a mutual fund license today.
So no PMS or AIF standalone can launch
it.
Okay.
Only MF companies. Within mutual fund companies also, there are two criteria. The first is either they have a 3-year track record. So it's a slightly older AMC who has kind of been managing the mutual funds without any regulatory actions for last 3 years. That is one category. Or if you are not 3-year-old, then you can appoint a fund manager who has been managing funds with an average AUM of more than 5,000 crores over last 10 years.
Okay.
So it's basically well-defined criteria who can do it. So either existing AMCs, 3-year-old, or someone with a fund manager with 5,000 crore plus of active management AUM over last 10 years. In fact, there's a very small set in the industry. So those fund managers are very sought after now.
Okay, got it. Rishi, do you think SIFs will take away market share from AIFs and PMS? Because I presume a lot of these fund managers also will be from the AIF side of the business, who are probably managing some of those funds. Now, as they get demand from mutual funds to launch SIF schemes, one, fund money chases the fund manager usually. So once they move. And second, given the fundamental nature that this is going to be a strategy which is similar to an AIF, even if I'm an HNI who has 1 crore, why will I not put it into an SIF? Why will I continue doing AIF?
No, so definitely, that is going to happen. So I think PMS AIF, I would categorize it as not immediately on the PMS side, it won't clash, because right now all the regulations have come for long short strategies only in the SIF. So I think immediate basis there's no impact on PMS. In the longer term, probably once the long only rules come in. So immediate impact is on AIFs because it is long short as well, and what you mentioned that even 1 crore and above investors can look at it. But right now the difference is the exposures, right? The 200% gross exposures versus the 100% gross exposures. Obviously, taxation, we are all assuming, will be mutual fund in SIF, so it will be better. So depending on the type of strategy, post-tax, investors could be better off in an SIF, or investors could still be better off in an AIF. And in an AIF, because of 200% gross exposures, there'll still be some strategies that you can do in a much better manner. So therefore, I think there will still be pockets where the AIFs will be more interesting. There will be pockets where the SIF will be more interesting. But yes, on an immediate basis, the ones where the same strategies can almost 80-90% be done on the SIF, they will definitely lose market share. But I think it will be a bit gradual over the next 1.5 years, because the first 1.5 years will be a little slow in terms of the various mutual funds launching these SIF schemes. And then one will have to see the nature and breadth of the strategies that are launched.
Actually, the big opportunity for SIF companies is basically you're creating a new market. obviously AIF cannibalizing the market there is an opportunity, but the bigger opportunity is taking this market much bigger because first it will be online distribution. It will be available on RTA websites. You can basically buy.
Yeah, so actually that was going to be one of my questions, that how can an investor purchase, how can a distributor initiate this?
So SEBI has again basically asked the RTAs, the ecosystem players, RTAs, exchanges, depositories to be ready for this new category of funds which are going to come in. Idea is to give the experience to an investor similar to a mutual fund.
Okay.
So you'll be able to go on an AMC website and buy an SIF, or obviously some distributors or advisors like InCred Money, Paytm, etc. will launch these on their website and apps.
Got it. And so through my RTA integrations or through integrations, it's a platform like BSE Star, I should be able to offer it.
Yes.
Got it. Now, can you tell me that just as we have benchmarks in a normal mutual fund schemes, how would you set a benchmark to these SIFs? How do we know if somebody's done well, or how do you, because it seems it's a lot more not so simple as compared to a mutual fund.
Right. No, so I think what SEBI expects is that if you have an equity SIF, you should have some benchmark which would be equity linked. Like if you have hybrid, it will be hybrid linked. Having said that, obviously it's very difficult, right? Because as we're discussing, there are different risk profiles or risk payoffs which are possible. So there's no right answer. I think that's where the education comes in, that you have to compare with the right thing, maybe across different SIFs within the same category. But it will be a challenge. The benchmarking is a challenge, actually. Right. I mean, Rishi, maybe you can explain better.
No, I agree. So benchmark, there is no perfect benchmark. We face this problem in AIFs also, where you can't really give a benchmark if the strategy is very different from equity or debt. The same challenge will be there. Right now, SEBI has said, as Nitin said, equity, if it is equity long short, then it has to be an equity benchmark. If it is debt long short, it has to be a debt benchmark. But I think there will be some hybrid, that you will have to finally take.
Got it. Yeah. Because in this, you can imagine that somebody who, for the given amount of risk, lower the risk but may not be such high returns, but his, Sharpe ratio would be much better than somebody else. And then we typically tend to look at only returns, right? So how do you arrive at a consensus, and how do you know where should people do? Normally in standard mutual funds, you look at your past performance, you look at the fund manager's performance, and you're able to arrive at a consensus.
So as you correctly pointed out, right, the analysis has to be much more granular, much more in depth versus a typical mutual fund. So you can't just look at returns. You have to look at returns per unit of risk, returns per unit of drawdown or max drawdown. So a lot of these ratios will come into play, Sharpe.
So I guess a lot more education would be needed, and for platforms also to put this kind of information out in a much more simple manner, right? Okay, so Nitin, can you tell me where exactly are we with SIFs today? So operationally, as you said, RTAs need to be prepared, stock exchanges need to be prepared. So where is it from an operational point of view, and when can I as an investor invest into an SIF?
So the deadline, or basically the starting point as per SEBI Rex, is 1st of April.
Okay.
But I doubt that ecosystem is ready because a lot of kind of groundwork has to be laid, especially in terms of RTAs, exchanges, depository. Even on the AMC side, for kind of managing these strategies, the dealing systems, the risk management systems, it will take some time.
What about the fund manager capabilities? Because they've probably never experienced investing in.
So you have to basically hire a team, then have the system in place. So I still feel that, the SIF launch probably quarter to 2 quarters away.
Okay.
But it's going to come very soon.
So there must be a lot of preparation
going on. Yeah.
So a lot of these rules are still not fully clear, right? So all that SEBI has said by 31st March, ideally, exchanges should figure out certain things. So all of that also has to happen by 31st March, which may or may not happen. And even if it does, then, somebody who is fast off the curve, also some AMC, they will need to first file.
Right.
Then the, approval will come, all of that. So I think easily 1 to 2 quarters, as Nitin is saying, will take. And then the teams and all that have to be formed as well. And then the education thing, I think, is a big thing, which you were mentioning, because that is where I think the differentiation will come. People who are able to do that faster, will take the initial pie for sure.
So Nitin, from an AMC preparedness point of view, what is it that an AMC must do to launch these schemes, and where are they in that process today?
So one thing SEBI has said that you have to have a different brand name, a different logo.
Okay.
Even if an existing AMC wants to launch an AIF, it cannot be in the same brand name or same logo. So basically we'll have a separate website. All it can say is powered by X mutual fund. To have that association, it will be a different brand name and different logo to differentiate the two products. So it will be a different new website of every AMC which will launch AIF in a different brand name and logo.
Okay. What was the rationale for this?
So first of all, obviously they want to keep the market separate. I mean, someone should not confuse SIF with mutual fund and buy an SIF if they intended to buy a mutual fund. So at least the mutual fund market, which is already growing and set, should not be kind of coming in the way of this thing. And again, like the where the regulator is coming from is it's a new category. It has potential of being more high risk. So things will go very slowly. So they have kind of defined the boundaries where someone can operate in.
And that way the investors also know that this is something different, right? And there'll be the questions to the advisors and distributors as to why this and how different is this. That'll automatically happen. So one can't missell also as easily as if it was entirely on the mutual fund platform.
Got it. So a lot of brand managers in play right now, creating a new brand. Nice. Rishi, can you tell me what are the opportunities and the threats that are going to come from SIF? So the opportunities from an SIF industry and what are the threats that it can bring?
See, opportunities are sort of limitless, right? So there are n number of strategies that can be launched very quickly if the right fund managers and teams are there. Some examples that we spoke about, on the equity long short side. Then you can have this call overwriting thing which Nitin mentioned, right? Which a lot of HNIs do on their personal level also sometimes on stocks that they know or like or have for the long term in their portfolio. So there are some of these things which automatically a little bit of knowledge is already there, but they don't have a regulated investment vehicle to sort of go through. So there obviously, there'll be immediate participation. So these call overwriting strategies, the leveraged equity long, the long short where, you can with lower returns, maybe lower returns but much lower risk. Then what long short strategies which we do in an AIF, smaller versions of that because of the exposure restriction, but you can do something where you get better than fixed income returns post-tax while remaining very low risk, right? So these kind of various strategies, and then on the hybrid side, of course, there's again a whole host of things you can do. So these are all various opportunities, and depending on the team and what kind of strategies an AMC wants to launch, there are different opportunities that one can play based on their strengths. The threats and weaknesses are obviously that, as we are discussing, that there are very less fund managers and teams who have that experience. And with SEBI's restriction that only 3 years, at least the AMCs need to have experience or fund managers with, 10,000 crore AUM, etc. So that again becomes limiting because there are not too many long short managers who have had that kind of AUM. So you'll need to basically work with other people who are already in the mutual fund, I think. So those are a little complex things which will need to be worked around and may have their own operational issues.
Right.
And then of course the operational backends, etc. Right? The dealing softwares, the operational backend, all that needs to be ready. Otherwise, the reporting and other things can also go for a toss.
Right. Got it. Nitin, do you think SIFs could be a 10 lakh crore plus category?
Yes, I think so, and I think it has all the ingredient to be the 10 lakh plus crore category. The reason is that it has all the strategies which deserve an allocation into client's portfolio. The only limiting factor is how fast the distributors and advisors adopt it. So yeah, it's definitely possible.
And do you think there could be an SIF only AMC in the near future?
I wish there will be, but I think it's difficult. But SIF only AMCs are still some time away. Obviously, there's an opportunity to be a top 5 or top 10 SIF players, which are different from today's top 10 players. But SIF only AMC, I think, still some time away.
One question on the debt SIFs. So you could have long short debt SIFs or sectoral only, right? How are they going to be different from traditional debt mutual funds?
Actually, we were discussing this point yesterday. So debt SI will be a very, very good category because till now there's not much on the short side of debt. So today you can basically buy debt funds like a debt mutual fund or a gilt fund where you're buying bonds, government bonds or corporate bonds. If I want to take a short exposure, that is not possible today in a mutual fund format. So with debt category of SIF, what you can do is long short on mutual fund, which means I can take views on the yield curve. If I feel that, okay, short side or lesser duration, less than 2 year interest rates are going to come down, but longer term rates are going to go up, I can take those views in terms of how the curve is shifting, how the curve is flattening or steepening. So these are very different strategies which are not possible today. This will also help us build the interest rate derivative market in India. So I think a lot of exciting things are possible on the debt side.
Got it. So this would be via the OIS market, or that's how you would.
So what SEBI said, it has to be an exchange traded derivative. Okay. So I think it would be probably trade settled between the two parties on exchange.
Okay.
Yeah.
That way. Before you wrap up, any final advice for investors and advisors who are considering this category?
So I think everyone should at least give the NISM exam. That will give a good primer on what is derivatives, what are the strategies, and what is possible, especially for the advisors. For the investors, I think you should ask these questions to the distributors and advisors, or what is this SIF, how is it going to come in, and a lot of these educational talks are required so that we can kind of spread the knowledge. I think we can evaluate once the studies start coming in, what is happening, and maybe we can kind of educate the customers more on that. But till that time, I think we can just know about the derivatives market in more detail.
And Rishi, same question for you.
Yeah, I think largely the educational piece is, I think, from my perspective, the most important, because whether it's investors or advisors or distributors, that is what needs to spread for it to be made relevant to everybody. So more and more effort on that from all industry players will be required.
Okay, great. Thank you so much for this. Very happy to have you all here and explain to our community about SIFs, which are specialized investment funds. I think it's been quite enlightening, and this will at least make people curious to go and read about these, read about derivatives, even from advisors, because we get a lot of feedback from them to, asking for this kind of content, because they also want to learn, they also want to expand their business. So, thank you so much for your time here today. And that's it, folks. That's a wrap for this edition of InCred Money Talk. See you next time.